Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome, today being the second day of the week, officially. Unofficially, it's the third. So it's the second trading day of the week, and there is quite a lot of things that we're expecting in the markets. However, since yesterday, we have had some key developments happening in the markets. Number one is that Binance, the crypto platform, is being sued by the SEC, including its CEO, Changpeng Zhao, or CZ. Number two, there is a big surprise that happened this morning in Australia. And this is where the Reserve Bank of Australia was expected to hold rates steady at 3.85%, but they surprised everyone by going for a 25 basis point hike, eventually moving their interest rates to 4.1%, which as a result caused the Australian dollar to strengthen in the markets. So if you're looking at charts and you see a big spike in Australian dollar pairs, then you should know it's as a result of the surprise rate hike by the Reserve Bank of Australia. So as you can see here, it was a very definitive move. So immediately after announcement, the market jumped all the way up. And since then, if you look at a smaller time frame, the market has just been consolidating around there, up until we get into the London session. And hopefully we'll get a new direction in the market. And this could be a continuation or even a reversal. So all we have to do is to observe these limits here. So it's either the market breaks the upper side, or it breaks the lower side, or it basically stays within these two limits for the rest of the day. So a break above would mean we continue trading higher, a break below we trade much lower. So this is the 5 minutes chart. So I just zoomed in to help you understand the kind of consolidation that's happening here. So if you use the 15 minutes chart, this is how it looks like, but chances are we'll be seeing some further continuation as the Reserve Bank of Australia has committed to continue doing more rate hikes, which is a data-dependent approach. So if inflation remains sticky, they might go for another rate hike on the next meeting. And this is reason enough to strengthen the Australian dollar. So that being said, now we can focus on what we're expecting for the day. So there's also other news that happened early in the morning. Retail sales monitor in the UK were up 3.7%, but missed expectations of 5.2%. Average cash earnings for Japan were 1%. This is compared to 1.7%, which was expected, and 1.3% the previous month, basically meaning that earnings growth is slowing down. Then household spending in Japan was really down at negative 4.4%. And this is a culture that the Bank of Japan has been trying to fight, where you find that people tend to save a lot. And this basically leads to deflation within the Japanese economy. So they want to encourage more spending. Unfortunately, the situation is getting worse. So we might be following further presentations by the Bank of Japan governors, try and understand the future of monetary policy. So in Australia, current account, which was 12.3 billion, which is basically the difference between exports and imports. So it's improving from the previous reading, but clearly missed expectations of 15 billion. So now that you've seen the cash rate, besides the 30-year bond auction in Japan, I believe the rest of the day is expected to have very little or no meaningful news announcements. So key highlight would be, say, retail sales in the Eurozone at midday. That should be about 1 hour from now. And then, of course, the IVA PMI. The IVA PMI is a very good measure for Canadian economy. So it's done by the Richard Ivey Schools of Business. And it's basically survey that is done through the purchasing managers. Here in Kenya, we call them procurement managers. So you try to understand the number of orders that were placed in those industries over the last 1 month, and this will help you project the oncoming production for that month. So it's a very good leading indicator, and central banks tend to follow it to make decisions. So we will be looking at the manufacturing as well as services conditions for Canada, and the data will be released at 5 p.m. So besides this, there's a big news from China. So China has asked the big banks to cut deposit rates again to boost economy, and this is quite important. So when the commercial banks are cutting deposit rates, it basically means that when you deposit money with those commercial banks, you are going to get paid a very low amount of interest. So this basically discourages you from saving your money with that bank. So as a result, people tend to spend this money in other endeavors, and this may mean increased consumption within the economy or even increased investment within the economy. So as a result, it has the effect of stimulating economic growth. So from the most recent data that we saw with the Chinese services and manufacturing, it's slowing down, and now the government is reacting by doing policies that are expected to promote economic recovery. So in this case, we expect the Chinese economy to start accelerating again, because more and more people will be discouraged to save in the commercial banks. So that being said, it's time we jump in on the charts. So besides the Audi USD chart, there's also the UK 100 chart that is on course to form what looks like an inverted head and shoulder pattern, where this was the first shoulder. We have a neckline here. We have the head here, and now we are going for the other shoulder. So the pattern is yet to hit completion on the 1 hour chart. So we might be quite patient and wait for 7,557. And once we get that, then we look forward to the last swing back to 76.47 before we confirm that the chart has bottomed and now we start trading upwards. So as for the dollar index, we know that it was making a recovery even yesterday during the presentation on the market snapshot. Then later on in the afternoon, there was a very big drop in the dollar, and this caused quite a volatility in the market. So main reason this happened was as a result of the US missing on factory orders. So if you go to the economic calendar, let me show you what happened here. So yesterday we had the ISM services PMI, which slowed down lower than expected. So we were expecting that the services sector would read 52.6, but the actual data was 50.3, which was lower than expected and lower than the previous month. So the other one, which was very surprising, is that factory orders, which had grown 0.6% in April, grew 0.4% in the following month, that is May, despite the market having an expectation of 0.8%. So the slowing down of factory orders in the services sector is well in line with Jerome Powell's target. So we know that the Fed wants to slow down the economy, slow down factory orders, slow down services, slow down manufacturing. They don't want to get into the recession territory, but they want to slow it enough to make sure that prices stabilize at least to the 2% target. So when you see such data, it conflicts what we saw during the non-farm payrolls, where the US created a record. This was over 300K jobs. So in this case, it's in line with what Jerome Powell wants. And if Jerome Powell was able to achieve what he wants, then he would definitely not go for another rate hike. So data such as this would be supporting him not to go for a rate hike, whereas the NFP data last week is supporting him to go for a rate hike. So in this case, if you look at the reaction in the market, what happened was that the dollar weakened, because investors would expect that Jerome Powell would start pausing interest rates. So that's why we had a weak dollar. And as a result of the weak dollar, we saw the pound making a very strong rebound here. We also saw it happening with New Zealand USD. So we had USD CAD. In this case, the dollar was losing to the CAD. It's quite the opposite. So it's also important to notice the kind of chart pattern happening here. On a major support level here, we are seeing a very interesting candlestick pattern with this pin bar indicating rejection of lower prices. So we have already retested last week's low, and also a low that we experienced some time back. This is around the 16th of May. So now it seems like the market is bouncing and there could be something here. So USD JPY here made a very sharp drop yesterday after the news. So in this case, the dollar losing to the Japanese yen, hope the dollar will start recovering later. So gold made quite an accelerated run towards 1964. So this was the target for me. But then once it got there, pulled back downwards. So for US equity indices, you can see how the S&P 500 was well on course for another leg up. But then after the data was read, the SP 500 dropped back downwards. However, it remains elevated, and so is the case for other US equity indices. So NASDAQ 100 pulled back downwards, is trading here. And of course, the Dow Jones was the sharpest dropper. So made a very sharp drop, but today seems to be trading sideways. So as for Brent oil, it had opened the week pretty healthy, right to 78.485. Then moved back downwards, traded within a triangle for the day before breaking towards the lower side. So we can all observe the triangle that was happening for oil prices. So if I was to use these prices here, then you'll notice that the triangle was taking a shape around here. So yesterday towards midnight, this is when we had the break. Market traded silently, and then this morning made a sharp drop down lower. So in this case, we are seeing sustained pressure happening in oil prices, where anytime you see some form of attempt to recover is faced by some further downside pressure. So I expect that oil prices, since they were not able to break the $70 level, then the overall direction is back down, and we could be seeing some further downwards prices. And of course, we have newer targets much lower at 74.6 and of course 73.3. So for USD CNH, you can see the dollar is attempting to make a recovery after losing yesterday in the evening. So the dollar has been pretty strong against the Chinese yuan. So the fact that China announced that they will be reducing the interest on deposits, which basically discourages savings, then we expect an excess amount of CNH to be flowing in the economy, which is quite negative for them. So for the Chinese yuan, we expect the currency to continue weakening. So in this case, I would be observing the USD CNH pair, especially if it were to break this particular resistance, then we'd have the basis for our next leg upwards. So that's it for the day. So I'll be looking at the questions that you guys may have raised. Does gold and GBP JPY correlate negatively? No, they don't. You might see some correlations here and there, but if you take a longer term view, they actually don't correlate. Hello, Trapsked. Hello, Patrick Wangari. So I'm just wondering if I have a problem with my connection or if I can see all the questions. So I'm trying to reload my page. Hello, Philip. Thank you and welcome to the session. So going into tomorrow, there is more that we'll be expecting. So Wednesday, early in the morning, or just 1 hour, 20 minutes. So 2 hours, 20 minutes from midnight, we'll be seeing a speech from RBA Governor Ueda. We'll also be having another speech by RBA Deputy Governor Bullock. Then Australian GDP data will come at 4:30 a.m. So there is a good chance we'll also be seeing some volatility in Australian dollar pairs at 4:30 a.m. tomorrow. Then Chinese trade balance and US denominated trade balance before we look at Japanese leading indicators. And of course, unemployment rate at 8:45 a.m. for Switzerland before we look at German industrial production, which is considered to be one of the most accurate leading indicators of industrial production in the Eurozone. So if German industrial production is doing well, then we expect that the rest of the Eurozone is also doing well. But then if it's weakening, then it's bad for the entire Eurozone. So towards the end of the day, we'll be having the Canadian labor productivity quarter over quarter, trade balance, and of course, US trade balance before we look at the most important data for tomorrow, which will be the Bank of Canada rate statement, and of course, the rate statement. So in this case, we'll be looking at the Central Bank of Canada maintaining rates at the current level of 4.5%, and of course, issuing forward guidance on the rate statement. So investors will be following closely if there's any surprise, like it happened earlier this morning with the Reserve Bank of Australia, then we will be expecting to see volatility in the markets. So that's it for today. Checking to see if there's any questions. Does the new Apple Watch release affect the NASDAQ? Definitely. So the NASDAQ is highly weighted. So we know that the big companies take a bigger weight. Same case as the S&P 500. So what this means is that if there's a big surprise in Apple shares, then it should have an angle on the performance of the NASDAQ. So for instance, if you check Apple and how it performed yesterday. So yesterday was the developer day. So this is when they get to showcase what their developers are doing, what the community are doing. So during the developer day, they announced the release of their VR headset, and it's going to be costing $3,500. So last week, just very nearby is when we saw Facebook announcing their VR headset, which is set to retail at $999. So of course, the Apple device is much more expensive, but of course, the features are much better for Apple versus Facebook. So at the close of the market yesterday, it was up 1.45%. And of course, in pre-market trading, it happened to erase all the gains, so dropped 2.56%. So we will be expecting the market to open with a small gap downwards. So year to date, the stock has been doing really well, 46.78%. But this is dismal compared to what we have seen happening with Facebook, Tesla, and of course, the king of this year is NVIDIA. So we will be expecting to see a follow-up. So most investors will be following closely on the sales that happened on the first few weeks to see the uptake of these devices before they can make an investment decisions. For long-term believers in Apple, they probably have already bought in, and they expect to see more gains as the company continues selling as it has always done. So that's the first question. When you say the dollar is losing, we go for sell any currency against the dollar. Example saying USD card losing, we go for sell. When you say the dollar is weak, we are looking at the dollar index, which is basically a measure of the strength of the dollar against a basket of 6 other currencies. So the dollar index is the one standard that is used to measure the strength of the dollar. So clearly, yesterday, it was losing after the announcement of the news, but today you can see the resumed strength of the dollar, especially over the last 2 hours. So this is a very clear indicator that there is a good chance we will be seeing the dollar continue to be strong for the rest of the day. And of course, if it's strong for the rest of the day, you want to compare that with the weakest currency in the market. So you might look at currency strength meters or other indicators to show you which currencies are weak, or you might look at your technical analysis and look at the ones that are in support or resistance so that you'd have a better entry point. So an example, I think, is USD card has been quite a nice bounce here from support. But also, if you look at the USD against the Swiss franc, I think that's the best one so far. So USD Swiss franc, this one has been trading on this particular trend line, acting as support. And then in the last 2 hours, you can see there was a very strong bounce, and there's a good chance we will be seeing the price break the current level of 0.907 and head straight towards the upper trend line of 0.91. So 0.91 might be a nice target for the USD Swiss franc currency pair. So this is a pattern that has been playing out very well for the last couple of swings. So just checking to see the last question before I end the session. So what is the long-term impact of DXY after raising their debt ceiling? So now that the debt ceiling issue is removed, so it's basically a limit that was self-imposed. So now we focus on Fed policy. Fed remains the number one factor that is influencing the market. So if the Fed policy continues tightening the economy, then it means that the DXY flies even higher. However, if they pause rate in preparation for a rate cut, then in that case, we could be seeing the DXY reverse and start going downwards. So gold 1981, let us check that. I don't think we'll be seeing that today. If the dollar index continues as we have seen, then there's a good chance that the price of gold will be going back downwards. So this was the big drop here in the dollar index, which resulted with a big spike in gold. This spike yesterday in the evening. But now we are seeing the dollar index recovering. This is a major resistance level, 1964. It's a level we have been targeting before. And now it seems like the market is pulling back downwards. So this is not even half the entire move that we had seen here on Friday and early Monday morning. So in this case, there is a good chance we'll be seeing some further downside pressure on gold. And of course, if you look at the last set of candlesticks, they seem to be having long upper tails, meaning that their attempts to move gold higher have been failing every time. And it's just a matter of time before we see some further downwards movement in the price of gold. So a nice target would be the previous low or yesterday's low. So somewhere around 1938 for the price of gold. So that's it for the day. Thank you very much, guys. And I hope to see you on the next session.